Okay, guys, well, let's get started. I'm going to analyze a few pairs for you and to understand as to where the market is heading. We are in a very interesting times, and I literally see that Q3 and 4 will be driven by the US dollar, and that's what is expectations are. So let's get started. First, a brief video on analyzing few pairs and to establish where the market is heading, the trading opportunities we could have for next week, and how to take advantage from them. Well, let's get started. Dollar index first. We have free pin bar rejection, 1, 2, 3 pin bars rejection at 98 at 1T2, which was a weekly resistance. Price had been in a decent bullish market structure, as you can clearly see. Price has been in a bullish market structure. The trend is bullish. We were sitting at higher high formation before the price started retracing as expected. Now, 2 weeks of deep retracement on this, and price came all the way to 96.54. Price tested this trend line support level here, and there's another one which has been respected for some time now, and an important support confirms here. Now the price retraces back. What I'm expecting is next week, in the first half of the week, I'm expecting that price with this momentum can go a little higher. That's what my expectation is. Try to test these highs here again, and if there is rejection, which I think there will be, I'm expecting the price to go down. That's what my expectation is. That's what the trading plan is. So I'm expecting the price to retrace in the first couple of days, maybe another push higher to, let's say, 97.75 levels, 97.80 levels, before the price will reject. And I'm expecting the price to go down. That's what my expectation is. Now, remember something. This analysis is valid. As long as the price fails to break 98.40, price can retrace all the way to 100%, forming triple top formation before it rejects and go down. So we will be looking for 1, 2, and 3. So that's what the expectation is. I could still see this engulfing candlestick is a controlling factor. You got a shooting star formation. You got another shooting star formation before the price. The buyers had to engulf all these three candlesticks before we can say the buyers have taken control of the market. So now at the moment, the sellers are in control. The price is only retracing, and I will be looking for a low high formation for the price to go down. So that's what my directional bias is, based on the reading of the price action, based off the reading of the market structure. Now, how you should be trading this next week? Well, I am looking for selling opportunities on dollar index. So I'm trading a dollar index to the downside. So I will be waiting for the dollar index to give me a selling price action on this, which is looking for a low high formation. So I will be looking for a low high formation, and at that low high formation, you will be looking for selling on the dollar index, which means that you will have bullish buying opportunities on pairs like EURUSD, GBP, USD, New Zealand USD, USDCAD will be bearish. So the dollar crosses will give us bullish opportunities, and I will be looking to sell dollar. So that's what my trading plan is. So let's try to zoom in further to establish where likely we will be seeing these levels. So let's move on to the daily chart. That's the daily chart here in front of you. You can clearly see the price is sitting at an important level. Again, price can reject from here. Yes, price can reject. She can go down from there. That's the first possibility. Price rejects and go down. That's the first. To look for low high formation. Now, guys, you need to have specific rules to establish that the low high has been formed on a smaller time frames to take advantage, and I'm sure you will be using this. Again, for the purposes of these videos, we are specifically focusing on an analysis, not going into the process itself. Now, let's Fibonacci's, important Fibonacci's, price sitting at 61.8 at the moment. So I will be looking for selling opportunities here. In case the price rejects. Also, if the price continue higher, which I think the price will, this is an important selling zone, and I will be looking for selling opportunities from this. So that's what the trading plan is. Interesting. I will not be looking for buying opportunities on the dollar index. My trading plan is to look for selling opportunities on this based on the reading of the price action. I'm not expecting the price to break these highs, which is 1, 2. The worst case scenario could be the price goes all the way up, making the third attempt before the price rejects and price go to the downside. So I am looking for bearish dollar. That's what my trading plan is. Index means looking for buying opportunities on crosses like EURUSD, GBP/USD, New Zealand USD, Australian USD. These are the pairs that I'll be looking for buying opportunities. Now remember something. When you see the dollar index is at a significant level, it forms a low high formation. All I do is scan the dollar crosses, which is EURUSD, GBP/USD, New Zealand USD, Australian USD, and I look for, because dollar index is at resistance, forming a low high formation. Listen to this very carefully. Forming a low high formation, at resistance, forming low high formation, going down. That's the dollar index. I will be looking for, out of these pairs, EURUSD, GBP/USD, New Zealand USD, Australian USD, looking for pair which is at support, in higher low formation, about to go higher. You have an advantage when whilst trading USD crosses, because not just you have the technicals of Pacific USD pair that you are trading, versus, let's say USD, you'll also have an advantage to see the strength and weaknesses of the dollar index, which is one of the currency within that pair. So, exciting time for dollar. We are specifically focusing on the next week price action and the next week trading plan here, but I will be sharing an analysis where I believe the dollar index in the next Q3 and 4. I've recently recorded that session for one of the hedge funds. A very interesting lecture, and I will be sharing from that lecture as to where I see the dollar index is heading, which is pretty much is the view of most technical analysts and the economist in a long run. So that's where we are. We're bearish on dollar index, looking for trading opportunities, selling dollar, looking for buying opportunities on its crosses. Well, my anticipation is that I'm expecting the price something around these areas, 78.86 Fibonacci, which is an ideal price zone, which is the best low high and high low formational Fibonacci zone that you look for trading. So it looks a very neat and decent price action. But let's move on to the next pair. So because of the dollar bearish bias, I have chosen EURUSD. We've been trading EURUSD. We had a successful trade last Thursday on EURUSD, a selling trade, which you can go and watch on the YouTube. There is a recording of a markups without a sound, where I analyze the market using the markups and establish where the price is heading. It was nice and easy, and I can see a lot of people have taken advantage last week and been profitable on EURUSD. Now, a quick glance on this. Remember, we are looking for selling dollar, so we will be looking for buying the crosses. That's where we are. It has been in a bearish trend. Yes, no doubt about this. It is in a bearish trend. What I'm expecting specifically for next week, what my expectation is, I am not expecting the price to break this. I'm not expecting the price to break 101.11. What I'm expecting is, this is what I'm expecting, the price to rebound up. That's what my expectation is. And if the dollar index, and I'll say it again, and let me show you, if the dollar index break these highs, then EURUSD will break these lows. That's pretty simple. And as I said, I'm not expecting the dollar index to break the high next week. That's my expectation is. Of course, price can change its circumstances. Hence, I'm not expecting the EURUSD to break these low. So what my expectation is, my trading plan is, this is the trading plan. That's what my trading plan is. So let's zoom in on this and try and establish where the trading opportunity lies. That's where we are. Price came in 1, 2, 3, 4, 5 last week, hanging star formation, hanging man formation. Then you have an inside bar. These are morning star formations, engulfing candlestick, shooting star, engulf another. A decent movement to the downside for 111 pips, which is a substantive movement on your USD. Now, how do we see this? Because we are looking for selling dollar, I'm expecting a bullish run on this. Price is on interesting levels. So you can see price is exactly sitting at 61.8 as dollar index was sitting at 61.8. And exactly as I said, these are interesting areas for buying opportunities on this. So what my expectation is, price can come to these zones and price can go higher. I'm not looking to sell the EURUSD. I will be looking for buying opportunities on this. As I said, I'm looking for selling opportunities on dollar index. So we'll see how the price develops. If the price breaks 1.1200, then I'm expecting a deeper retracement to 78 and 88.6 around these areas. Otherwise, keep an eye on this. Price, if finds support here, forms the higher low formation. As I said, if dollar index forms low high formation, here I'm saying if the EURUSD forms higher low formation, that is your trading opportunity. So beautiful price action on this pair. Very interesting. Again, if you get a high low formation at 61.8, why not go for a trade? If not, you're looking for 78 and 88.6. Higher on this. This analysis is valid if and as long, and I'd say it again, as long the price fails to break 1.1100 here, and on the dollar index, if the price 8 levels. So I hope this analysis is absolutely clear and it would make sense. Now let's look at another pair here. Quickly, USD CAD. I've been sharing this analysis previously. If you look at the trading view, we shared the short trade on this and we had a successful run on this pair. Again, I have recently given a lecture to one of the hedge funds where I've discussed the Q3 and 4 movement of dollar index, and in that perspective I've discussed USD CAD next major move, and I will be sharing my analysis on this and my view on USD CAD was in the lecture which on dollar index in the next Q3 and 4, and it will be a very interesting lecture. You'll see a lot of macroeconomic facts and reasons, not just global uncertainty and risk-on factors against US trade war against China, and then you have the Brexit in Britain and European countries, with Russians dominating their influence with the belt analysis with Chinese. All these factors combining had made a significant formation, not just economically on dollar index, so the next Q3 and 4, but also technically you can see a pattern in formation on this, which I will be sharing at a later stage. So let's get started on this. I'm expecting a huge bearish candlestick, rejection. We can see the price has been in a bullish market structure, slow movement to the upside, hugely rejected with a huge engulfing candlestick, substantive candle here for 124 pips. For USD CAD, it is significant because remember, it's not a high volatile pair. So it's very interesting. Price rejected. Then you had this retracement last week from Wednesday, Thursday, Friday. We're expecting this retracement. At the moment, as the price action stands with 1, 2, 3 pin bars formations, creating a negative divergence before the price melted and retracing. I'm not expecting the price to break this high, which is at 1.3520. I'm expecting the price to make a low high formation. and go down. That's my analysis is. That's what my expectation is for the price not to break the high, which is at 1.3550. If you round the number, that it's 1.3550. I'm not expecting the price to break this, and I will be expecting the price to reject below this level, forms low high formation, and make its way to 1.3050 levels. Again, this trend line is extremely important. It's been respected, as you can see, and I am expecting the price to test this trend line. This is the ultimate target for shorts before we review our analysis again. Again, as I said, I'm expecting the dollar index to go down. That's what I said. So USDCAD is exactly the same thing. I am expecting when the dollar index goes down, USDCAD, the US dollar is, as a base currency, will go down. That's my expectation and anticipation is, with dispute emerging in the Gulf with Iran and United States and the British government involved. Things will heat up, and we can see what is my expectational move for Q3 and 4 on this. So what specifically for next week, as it is a short-term analysis, I am expecting the price to go down on this. Huge engulfing candlesticks, technical perspective, huge engulfing candlestick. As you can see, the price retracing fails to break the high of this candlestick. Sellers are in control. If I apply the Fibonacci's, price is rejected from significant 78 and 88.6. My target levels, yes, are at 1.30. That's what my target levels are on this pair. So let's zoom in to have a view on this. Nicely, price nicely came in. You can see 1, 2, 3, 4, 5 weeks of retracement on this. And that's where the price is. If we apply the Fibonacci's, you can see the price is sitting at 61.8. You can see the alignment of 61 minus 61%, which is 1.30 levels. So I am expecting the price on this, as I said, to go higher and reject. That's what my expectation is. I will be looking for selling opportunities on this. Looking for selling opportunities on this. The price already at 61.8 Fibonacci. Price can reject from here. So keep an eye on this. Keep an eye on this. And in case the price retraces higher, then the ideal situation is that the price forms a low high formation around 78 and 88.6 Fibonacci's. A good risk and reward opportunity. Again, I am not looking for buying opportunities on this. The only trading opportunity that I'm looking for is selling USDCAD, buying EURUSD, and again, selling dollar index. Well, saying selling dollar index means you can be looking for buying opportunities on any of the dollar crosses if their technicals are bearish in nature. So that's where we are. And finally, I'm going to look at US30. I already share a detailed analysis on this as to what my expectation is for the next couple of weeks on this. There's a complete breakdown on US30. We've been trading this pair very successfully for a couple of months now. I'll be very brief on this. I strongly suggest and refer you to that video. It's a great learning opportunity there. My anticipation is on this that the price again will form a low high formation and go down. That's what my expectation is, and I am looking for selling opportunities on this pair. We are at a substantial levels at 78 and 88.6 Fibonacci's. Yes, the price can go all the way to 2660 levels from a double top formation, but based off this price action, what I'm expecting is price to take a turn here to the downside. That's what my anticipation is. And the reason I've expressed detailed in that lecture on the YouTube, and I strongly suggest to you guys and everyone to watch. There have been a couple of breakdowns on this pair specifically for next week. Next week price action, yes, we're looking for selling opportunities again. Let's see how the price develops on this. If the price fails to break the high of last week, that look for selling opportunities at low high formation. And this is the trading plan. Look for low high formation, then take the sell trades. Look for higher low formations and then take the sell trades on the smaller time frames. Again, you need to have a specific rules, and I'm sure your mentors or strategies that you've been using have laid down those rules to follow. That's what my expectation is. The second case scenario here is this. And I'll briefly touch base on that. Price can go higher. It can go higher, yes. And then, so it can go higher, then it rejects, forms a low high formation, and give us a trading opportunity. So two possibilities: you look for low high formation here. If not, and price retraces further to the upside, look for selling opportunities around this zone. Interesting price action, great reward against risk opportunities are there for us on this pair. And again, I refer to everybody to watch the complete breakdown US30 on the YouTube channel. So that's pretty much it. I will, if I have time, again, I've been pretty busy recently, and so I wasn't able to share much analysis recently. But if I have time, I'll be coming up with more analysis, specifically on the cross pairs, and on the yen cross sets. I hope you enjoyed the video, and use these analysis in line with your trading strategy to learn and understand the forex and to see how the market moves. These are great learning videos. Watch them and try to understand why I am saying something and why the price is behaving in a certain manner. I hope you enjoyed the video, guys. I'll be out with the next video soon. You take care. Thank you.